What's going on, guys? It's November 5th, 2025. We had a rally and then a sell-off. This is actually the extended session. There we go. So yesterday we had a big gap down, pullback, sold off. Today we had a rally that started to sell off. We went just above yesterday's high. We're going to do a 10-minute breakdown of the E-mini where we talk about second legs, trap traders, and market context. If you guys are interested in seeing more about how I place these trades, check out the membership section where I trade predominantly 50% pullbacks, but right now I'm working on two different entries that I think will be a little bit more scalpy-esque. And I'm going to trade the 50% pullback from a swing perspective. So got some more systems in the works here. It's going to be fun. I'm really focused on 2026. I think 2025 is done. I've said that a few times in the videos, and I just want you guys to think about that because we have less than 2 months left. Like, if you guys don't have a system or you need help developing a system or coming up with an idea for a system, stay tuned and watch the rest of this video because all these trades I'm going to be talking about are all systematic trades based around leg twos, which so there's two first principles. One is breaking out, and one is the market's breaking out, and one is the market's reversing. That's the baseline for our system, for the system we want to develop. Then from there, we want to see where are the probabilities. So if we're focused on the market breaking out, here's a breakout. These bars right here, bars 4, 5, and 6, shot to get second leg, and it does bar 8. And then it also gets a bigger second leg, the low of 11 to the high of 15. What I used to look for was that big second leg. I would usually trade, like, have a 50% pullback and trade up to here. A little bit more of a swing. It takes more bars. Now what I'm looking to do is I want a true second leg. So I want to buy the close of 7. Or for trading range bar like this, maybe I set a limit order to buy at the low here. 1 second. I set a limit order to buy at the low here. And that means I'm still buying 11, but I'm taking it up to, well, in this case, I guess it's very close to 50% pullback. But you guys get the idea. If it's a strong bar like 9, maybe I buy the close. If it's a trading range bar, then I set a limit order where the respective buy zone or sell zone is, depending on the context. So that's what I'm working on right now. It's going to be fun. I'm also looking to build an indicator with that because I want it to be very systematic. I am working a little bit more now. Some of you know that I've been looking heavy for a 9 to 5 and a weekend job. And the reason I'm doing that is because I want to funnel as much profits as I can into my accounts while I'm still building them up. So the indicator will be 3 bars. I'll get a ping, and then I'll just wait for that first opposite bar, and then if it's a trade range bar, fade it. Blah blah blah. Everything I just said. Anyways, guys, let's do this breakdown. We got the weekly chart on the left. We got the daily chart on the right. Weekly chart. Yesterday was a bear bar. It's still a bear bar today, but now it has a tail. So not the strongest bear bar. Bulls are buying lows. And the low of this bear bar was the high of this breakout point right here. So you can see it rallied, bounced off, and bulls made a small scalp. Look at the daily chart on the. Give me 1 second here, guys. I hear something in the background. I'm mute the mic. All right, sorry about that. So here we can see that tail, and look at the daily chart. Leg 1, pull back, leg 2, pull back, leg 3, testing the breakout point. And bulls already made a small scalp. The third leg for the bears is hidden right here. All right, let's do this. Bar 1, bear bar. Bar 2, bull bar. Bar 3, bear bar. Trend range price action. Bull, we have a bear, bull, bear. Nice breakout bar, bar 4. And it gets followed through 5 and 6. Strong for a second leg. And you can see that bull has bought the first pullback, bar 7. You can make 1R very quickly on bar 8. Then we go into a complex pullback. Leg 1, pullback, leg 2, pullback, leg 3. So wedge bottom. Testing the breakout point of bar 4, and that's a 50% pullback, and you're buying at the low here. So many different ways to take advantage of this second leg, and then it rallies to the recent high, the swing high, bar Oh, there we go. So excuse me, I had the wrong target when I showed you just earlier. So if I'm buying the low here, I'm going to get filled on 11 and exit on 11 because my target is going to be the swing of the pullback bar. 2R worked in this situation. There we go. So remember when I was showing you guys like the multiple entries, my target would be, it's a little bit different, 50% pullback versus the trading the actual first reversal. There's a buy the close, sell the close, and there's a limit order entry for both of those. I have to get through the Excel spreadsheet. So there's that leg one, leg two, leg one, pull back, leg two, pull back, leg three, and the market goes sideways into a trailing range. Gets another nice breakout, 23 through 29, strong to get second leg, and it does shallow pullback, bar 30, boom, another swing up. So this is why I want to trade the buy the close, sell the close. In this situation, bar 7 is a trailing range bar, so I'm going to have a limit order to buy at the low. And I'm going to take it back from the low to the high with a 1R stop. So my trade would actually be structured like this. Stop down here, entry right here, target met quickly, quick scalp. And then in this, for this specific leg, the 50% pullback would work. I don't know if I would get filled because that's very fast thinking. But look on this trade. Bars 23 through 29. Really nice rally, strong to get second leg. 50% pullback never comes, but the bar 30 fade works. So bar 30 is a trend bar for the bears. I'm gonna buy the close here, and then I'm gonna hit 1R on bar 35. The difference between 7 and 30. 7 is a trailing range, so it's a limit order trade because that's the context of the bar. Bar 30 is a trend bar, and you could argue it's a trailing range. This could stop me out too. It could be climactic, but in this situation, it did work. These are trades I did not take today. Again, these are trades that I'm working on and I'm building an indicator for. Another nice rally, 33 through 38. Shot to get second leg, except it's now we're definitely in that third leg. Leg one, pull back. Leg two, pull back. Leg three. You can see the market goes sideways, breaks out to the downside. But just to reiterate from that trading perspective, I wouldn't trade bar 39 because it's an inside bar, but maybe I buy bar 40. And then you can see that the fade again worked here. So I like it. I get a little bit less of a trade, little less points, but more opportunities to trade. Again, I gotta finish wrapping everything up. I want to build the indicator and then back test the indicator. So I'd have 4 total back tests to do, which is a lot. First would be trailing range bars, then it's gonna be that trend bars for the bull side, then for the bear side, which I guess would be the same thing. And then I want to do it for counter trend trades. So here's a counter trend trade. That's not 3 bars in a row. Here's a counter trend trade. Bars. Well, the spike starts on 63, so 63 to the high of 71. Bar 7. Excuse me, 63 to the high of bar 70. 71 is the first fade. It's a trailing range bar, but no, actually it's a trend bar because there's more body than tail. So I buy the close. 1R stop, and my target's met on 73, 74-ish, depending on, limit order fill. So it works, theoretically. Again, we're in that third leg. Now we have our trading range. What's the market cycle? It goes breakout, first pullback, enters a channel phase. After 3 legs, we go into a trading range. When we get that trading range right around here, market breaks out to the downside, 60 bar 70 to 73, strong to get a second leg down. 74 is the first reversal. So if I was trading this, I don't know if I'd take that because there's not a bull body, but let's just say I do. I have a limit order in the sell zone, bar 74, because it's a trailing range bar. Boom, filled and exited on 75, and then another good trade, strong to get a second leg down, 75 through 78. 79 is kind of more of a trend bar. Let's see. Let's just measure it real quick. I'm gonna draw a box around the body. That's pretty close. And then I'm gonna put this on the tail. So the body's slightly bigger than the tail, so we're gonna classify that as a trend bar. And I'm gonna sell the close here, and then I make the fade on 81. So you can see it works. It's nice, but I want to go through the proper channels and do the back testing. But It's based off the first principle of the market. The market is breaking out. Second legs are highly probable trade. The reason it's highly probable is because there's three types of traders involved. There's trap traders, there's front running traders, trap traders, and second leg traders. All looking at the same thing. All have different agendas. They're going to trade the bars differently, but trap traders are forced to do what the winning side is doing. Front running traders want to add to their position because they're winning, and then second leg traders, us, see this, understand this context, and take advantage of that from a probabilities perspective. So thank you for your time, everyone. I hope you have a good night. Looking forward to talking to you guys tomorrow. Thank you for your time. Bye.